Hey guys and gals, take two on my weekend video. I get the whole thing recorded into the last minute and the software freezes. Wouldn't you know it? So we did manage to regain our COVID lows on this move up. We had last week we had a two standard deviation move outside the market maker move to the downside. Now we have it to the upside. If you go out here on a weekly time frame, let me show you something real quick here. This here is what almost is what you can call a pipe bottom reversal here going on here on SPX. So be aware of that. You don't have the actual true double opening right at the lows back up. It's awfully close to a pipe bottom scenario here on the uh, SPX. Daily wise here. So what I've got going on here, I drew out all the daily moving averages with SMAs on my chart with lines. And then I put the EMAs. These are the same values, but EMAs instead on this chart here. And to get an idea which one's more accurate, which is more valuable. And so if you go on a weekly real quick here, and is SPX. One second here. Whoops, wait a minute here. Oh, no, I got the Hall moving averages. Wait one second here. Okay, here's what I was wanting to show you guys. These are the EMAs right here. See how that 200 week EMA, okay? See how we came right down to that to the tick and bounced off of it? This suggests to me that the EMAs might be a more valuable tool in your arsenal for charting than the SMAs. So be aware of that. And if you look on the daily time frame as well, I want to show you guys that. And so basically, if you're using the EMAs, we are crossing right at the 2021 moving average. Now this 20 moving average has really been, this little zone here has been really difficult to get through. So we know if we break above the 50 EMA, we know that this thing's probably got some legs to the upside. So I do want to float that. So let's just keep a close eye on this on the daily time frame here. You know, if we can get above this 50 EMA, uh, to suggest we might, like I said, have legs in the market to the upside. Okay. And then if we want to go over here on the market maker moves, real quick here, one main takeaway I got going on in the SPX, we do not have overlapping market maker moves versus last week. So the move Friday was so significant, they are not anticipating a breakdown back into last Thursday's trading range. So be aware of that scenario on the market maker moves here. Now we are, let's see, uh, we are technically still outside of this channel. Okay, on the, if you take the wick, you're inside, but if you take where this acted as resistance last time and then draw that straight over, okay, we're technically still outside of that. Another thing I want to point out here, one second here, let me find a different view here. There it is. This is your Andrews pitchfork, okay? And if you were to take from the breakout, this is the top of your Andrews pitchfork, the breakout to the breakdown, the current breakdown area on the Andrews pitchfork, these are inverted because I drew it backwards, but this is the 61.8 area. So we came right into that 61.8 area of the move from the prior breakout, okay? This could be a potential resistance area going into next week. So just keep that in the back of your mind. And then another way you can look at this, activate. If you take that all the way up here to where it was resistance before, okay, right about there, okay, and this suggests from this view, if you just think of it from this view, we still got this gap up here. This suggests that we could possibly continue going up, fill that gap, and that'll put us a 50% retracement off of this prior breakout. A lot of times you'll see rejection at the 50 or at, well, this should be the 61.8 or at the 61.8. So, so basically we know the true inverted head and shoulders is going to get you back up to the 61.8 area. I know I got these inverted. I'm sorry. I might be confusing it a little bit. So that's why that is so important. This looks like an inverted head and shoulders. And to finish out the pattern, this up here would be the case. Okay. That'd be 41.75 here on the SPX. Now, if you go back to the market maker moves, real quick here, 41. See, we're not even anticipating a move all the way back up. So that would be a second week in a row on a 4-day trading week that we would be getting an outside move to complete that pattern. Okay. So just keep that in mind. 41.42 on that one. And one last time, let's check out 50% one here real quick. Where's that at? 41.42. So that's, basically you're coming right up into that 50 EMA is a 50% retracement. Okay, guys? So this 50 EMA is pretty much right dead on to, awfully close dead on to the 50% retracement of this larger pattern. That suggests to me this is the area we should find resistance this week, in my opinion. Okay. One other tool which you may want to add to your arsenal, that's the Hall Moving Average. Okay. And so we got, if you go and zoom in here, we got a bullish reversal signal right here on the Hall Thursday. So you knew if you're using a Hall Moving Average, you could have you should have went long Thursday close for a swing potential. So this right here, this Hall Moving Average gave you the indicator to go long Thursday night for an overnight swing. So we got our cues right here. This is our Andrews pitchfork. Came down to the bottom of the Andrews pitchfork. I talked about it last week in last week's video. So basically we got resistance up here. That's the breakdown level up here at the 298, 90 area, something like a 299 area. Anywhere up to the 304, I guess. So, somewhere through here, this is a head and shoulders breakdown scenario. So just keep that in mind going forward here. If this was a shoulder, okay, and this is the head, so that doesn't suggest that, we've actually completed the pattern, okay? So be aware of that scenario. If this proves to be the shoulder area, I guess, down here is about 50%. Somewhere down through here is about 50%, or 100% of the head. So, and that's what you typically look for, is 100% of the head to the downside. Okay, so you zoom in here on the daily time frame. We are on the EMAs here on the daily time frame. We are into the 200-day EMA as we speak, going into next week. So that could act as overhead resistance going into the first of the week. Remember that. Okay, it's acted as resistance up here. Couldn't get through it. Now we're back into that. It could be resistance going into this week. So I do want to make sure you're aware of that scenario. And or is that the, wait a minute, no. These are the Hall, I'm sorry. So you are into the Hall Moving Average. Sorry, I apologize. I do want to float. We did get an earlier signal here on that. Same thing. Let me make sure here. Yeah, Hall Moving Average. Last Thursday, we have a buy signal here with the Hall Moving Average. I apologize. I'm trying to switch between these moving averages so I can show you guys the difference of what's going on here. So bottom line is we've looked above this 20 SMA before, came into the midline resistance, and then continued to go lower here. So bottom line is it's a similar situation. You got to really get above this 50 before we can really say convincingly that the markets are turning bullish. Okay. So down here, anything could be the case here. But I'm just saying, it looks like we're probably going to fill this gap to the upside this week. So just keep that in mind. And we are seeing relative strength in technology. They started early last week, we were seeing some, or late last week, we were seeing relative strength happening here in tech versus the rest of the market. Not last week, 2 weeks ago. I'm sorry, apologize. So one takeaway I do want to have on the S&Ps, you did not even have the market makers overlapping the prior week. We do have this one slightly overlapping the prior week. So we were closing the week out with them being more bullish on a relative basis, S&Ps, versus the NASDAQ going into this week. So just be aware of that scenario going into this week. Okay, so I definitely want to be aware of that scenario. Okay, we're seeing relative weakness in the NASDAQ. We're right here at the top of these range highs, and we closed right near these prior highs here on the NASDAQ into the weekly 200 SMA and the monthly 50 SMA as resistance going into this week. So be aware of that scenario. We're still inside of our channel. We did save the bottom of our channels. Definitely, that's something noteworthy. So, like I said, we closed slightly above that prior high. So keep this in mind here. And this was the blow off top area that got rejected. So definitely some things I want to look at in relation to the Andrews pitchfork. Showing relative underperformance. We're actually seeing that in financials as well. So, this is something definitely we got to keep on watch to see. We are only 3 weeks out from the start of earnings season where the bank earnings start hitting the tape. So we want to start seeing relative outperformance, not underperformance going forward. And this is a big warning to me as well here on the market maker moves. Let me zoom in here on, well, let me go on to daily. 1 second here. And my warning is you saw the crossover on the market maker moves on the NASDAQ. It just kind of drifted a little bit into the prior week. This is the market maker move high for last week. Okay, at the top of the channel here. And this one here has even got less relative momentum, relative strength versus the other two indices, suggesting the markets are expecting less relative strength going into this week out of the Russell. Quick rundown of your spiders. I'm going to zoom in here real quick. So bottom line is your XLE. This is a little bit different. We had a real big sell down in energy last week. So the bottom of this channel represents market maker move low from the prior week. Okay. So it's a little bit different. All the other charts I showed you before were market maker move high. The channel represented the upper range of the prior week. Okay. This represents the lower range of the prior week. And so we are pricing in basically the same level as we did last week, except there's more implied volatility in this week's options versus last week. So be aware of that. We only got 4 trading, or I think it's 4 trading days this week. I'll have to double check. And the implied volatilities are wider here in the energy space. So be aware of that scenario going forward here. It does look like they're trying to imply that we might put in higher prices this week, a bullish bias going into this week for energy. So we'll just keep a close eye on that going forward here. And if you were to see, these are the EMAs. Let me see if I can see if those EMAs told us anything. Not really. The EMAs really didn't really help us on that one. Okay, but if I were to put the Hall moving average back up here, let's see if let's see if we can discern any type of signal here. Really ugly here on the daily time frame. You have to go down in smaller time frames, and that's what you can do with the Hall. It can give you early change of trend signals. And so we do have, as of Friday, we have a short-term buy signal. We're above the midline. We're above 50% of the market maker move area. So that's slightly more bullish than bearish, the prior week's market move area. And we do have a bullish scenario. So you have 2 things there suggesting that going into this week, we'll probably have a little with the implied volatility of Jack and everything, that the bias should be more to the upside. Okay, guys, move this over here to the other side. I'm sorry. So bottom line is XLV was just on fire last week. This is market maker move high from last week. Look where it all closed. It just on fire last week. These are our new market maker move. We're putting a gap and go scenario here for XLV. United Healthcare is reporting, not this week. Let's see, where's the UNH? 3 weeks out. 3 weeks out. And they are just coming in here in spades, pumping up the United Healthcare, suggesting that we actually might be going back to all-time highs here on United Healthcare here in the going into earnings season. So be aware here. We're just on the verge of a possible breakout to new all-time high. Running back to the all-time highs here on our UNH. Really strong pattern going forward here. XLP, we do have a downtrend here. Let me show you what's going on here. We might have started a breakout. I can't remember. There you go. Okay, depending on how you want to draw it. I think that's taking into account the after hours candle. Okay, so XLP, we do have some things coming up here reporting. This week, we got General Mills reporting this week. We do have Walgreens Boots Alliance reporting too. That might be a retail stock. Then again, it might be considered a general. I'm not for sure if that's an XLY or if that's a XLP. I'll have to double check that one on that. But we also have coming up here Pepsi. Pepsi is also is something to think about here. I think that's part of the XLP as well. Yeah. So that's why we're probably getting a little bit of relative strength here. This is more your defensive area in the markets, So this is not, in my opinion, a valid inverted head and shoulders, depending on how you measure it. If you measure it off the channel, that might be valid because that's about a third. Okay. If you get a third for the head, then that's a valid inverted head and shoulders scenario. So keep an eye on that. That's pretty close. I'll go ahead and say that's probably valid. Okay, depending on how you draw your lines. Okay, XLI, really ugly here. This is really underperforming here. So bottom line is, of course, this is value area high from expected move last week, and so we were really overlapping, even worse than. We're overlapping even worse than IWM. So they are expecting even less bullish momentum here in the industrials coming into this week, even versus the Russell. So be aware of that scenario. Okay. Transports, I don't have that one drawn out. Okay, there you go. XLF, I got XLF right here. I'm going to show you another chart real quick. I'm getting a little long in the video. So some things happening last week. Energy got crucified. The green line right here. The candlesticks are SPX. Okay, right here is the green line is your financials. Okay, so we had a relative underperformance for the week here for our financials. So be aware of that scenario going forward here. And definitely something to be aware of. As far as the leaderboard, XLU, the industrials, or the energy, XLV, just talked about them. And then I think XLY is up here too. XLP, okay? So, the XLV is your healthcare, XLP is your consumer staples, and he also had XLY. So, typically, so you got a little mixed bag here. XLY was the most oversold in the past 3 weeks, was the most oversold sector. So it makes sense if we get a short squeeze rally that XLY will be in the top of the leaderboard. Actually, you would have thought it would have been at the very top, considering how much it has underperformed, and it's not. There's still, the defensive areas are still pretty well outpacing, even with a short squeeze scenario on the XLY. Okay. Okay, XLF. So my main takeaway right here, pretty much the same relative expectations as IWM. You see that? the overlapping market maker moves here. So be aware of that scenario. XLC is really underperforming. For a little bit weaker expectations versus the Qs. Okay, the Qs were a little bit stronger relative to the relative strength. We're still, this is a valid inverted head and shoulders, in my opinion, if it plays out. So expectations are just a slightly less than other things in the Qs. So be aware of that going forward here. XLY, we had a strong rebound. Like I said, it was one of the leaders. We don't. They're saying Friday's move will probably not get taken back. We probably will not go back into Thursday's trading action after what we saw Friday here on our XLY. That's what they're saying to us. XLB is largely loaded with the energy sector. So this thing here, IVs are jacked to the moon here. So you can see this was the prior week's expected lower range. Okay, so now we're expecting a far lower range, and an extreme and a lot wider trading range because the IVs are jacked up in this whole sector. SMH. So here's my main takeaway: SMH expectations are in the toilet, and so this is really, you see how this momentum is overlapping dead on. This is actually performing the worst of my sectors, and we have Micron reporting this coming week. So be aware of that. This is really underperforming here. So even XLC is doing far better than what we're seeing here in the as far as expectations going forward are not that great here for SMH. And then we have our JETS ETF, similar situation, really completely overlapping week on week here. Not expectations are really not for it to go anywhere. So be aware of that scenario. Much little to no upside expectations. So be aware of that going forward here. And we do have TCOM 3 weeks out. That TripAdvisor. So that's quite a ways out for that one as well. So we do have Levi reporting in 2 weeks. As far as this week goes, we have Nike, Constellation Brands, Micron, Walgreens Boots, TCOM, and General Mills. Next week we got Levi, that's the big one. And then the following week we got Pepsi, Fastenal, JP Morgan, Morgan Stanley, Bank of America, Citi, USB, UNH, and Wells Fargo. So that's a few things that I was looking at, going forward here. So so be aware of some of the things going on here. 1 second here. My one final takeaway, I can't remember if I'm doing this the second time. I can't remember if I mentioned it or not. So if you flip these values, I drew it backwards. 61.8 up here, 38.2 right here. So the S&P is right here from activate. Okay, so we came right into the 38.2 here from the all-time highs, from this prior breakout area with our Andrews pitchfork on the S&Ps. This can be a reversal area because it took a month and a half for us to get out of this range last time. A whole month and a half. I mean, we've come down, we've had a rocket ship back up. This can be a consolidation area, so be aware of that scenario. Like I said, it took a month and a half to get out of this area last time. In all likelihood, we're probably going to go up to the 50%. And if I change like I said, I was showing you those EMAs earlier. Where's the exponential MA? And that's the weekly there. And so the daily here, see how the EMA 50 is hitting right at that 50 right there, 50% retracement. I'm thinking that is a very possible likelihood for this week. So I definitely want you guys to be aware of that scenario. And then one other view, auto zoom here, back on the weekly here. activate. Another way of drawing this, we can't, darn it, didn't want to do that. Always something, you know what? The breakdown right there, breakdown into the pitchfork. Okay. So basically, if these were drawn right, this would be 61.8. We are right here in a 61.8 from that breakdown. That's another scenario that we may have already run into resistance here, and that we might be chopping around, down here for the all week long. So I definitely want to make both cases, because I think we've gone up to an area that's really difficult. So be aware of that scenario, going forward. I don't know if I showed you that on the cues or not. I gotta say, pause. So, one other thing I want to point out here, the 38.2, we're still not even, we haven't even tagged that 38.2 area. I got these backwards again. Okay, from the all-time high. So I do want to float that out. That acted as major resistance on the way up. Okay, and we've really gotten hit hard here on Techland. So we are in a possible downtrend, possibly coming up early on this week, testing this 38.2. That'll fill this gap. Okay, so we'll possibly fill that gap, and then we also have the 50 EMA right above that as well. Suggesting that could be a significant resistance going forward here. So be aware of a couple of those scenarios, and I'm going to do this the same as I did last time. Activate, and this will be the last one I do. I'm not going to do the Russell. And if I come down here, right down to the breakdown, right there, okay, and this will give you some idea, some context. You see how this acted as resistance right here last time? This was your 61.8 net right there. So that suggests to me that we have some major resistance right here. Right here, it's just slightly above this gap. We got this gap right here that we're running, that we do have some fairly significant resistance here at the 38.2. Okay, so be aware of that scenario. That's actually lower than even this consolidation. So most people are going to be seeing this consolidation thinking we're going to run right up into that, but we might have resistance before we even get to that. So even at the top of that gap could be resistance going into this week. So be aware of that scenario. Just be careful. I don't want anybody to get themselves in trouble. Okay, so that's all I got to say. Sorry, I'm rambling on a little bit here, and so we'll see what happens here going forward here. So we do have a gap and go right around that 50%. See that right there? That gap came right up, right into that, and then we had a gap and go right at it, suggesting that we're probably going to at least get that this week, giving the relative strength that we're seeing right here. So we'll see what happens here. Definitely looks like they want to get out of this down channel, in my opinion. So we'll see what, anything can happen though. So please leave comments below, if you see something that I didn't see. And I'm here to learn just like the rest of you guys. Oh, one last takeaway. The next week, 2 weeks, are seasonally strong weeks because of all the rebalancing and everything. So be aware of that scenario. And 401k contributions.